Hi guys, today is November 19th, 2020 and futures pointing to a slightly lower open as US continues to struggle with mounting coronavirus cases, but at the same time the prospect of vaccine make people to buy some of the value stocks and actually keep the market up. So weekly jobless claims came in worse than expected a little bit as people stay more at home and there are more people that are unemployed, but still a lot of money out there on the sidelines and they're ready to be deployed. So let's jump to SPY ETF for S&P 500, and the SPY looks good to me. I mean, it looks good to go higher because there's a, like I said before, there's a W pattern which is a bullish pattern, and I think this is to me going higher. Okay, so if we check QQQ, chart for QQQ also points to a higher open, to go higher as well. So I am actually optimistic looking at the charts, but who knows? But I think we're still going higher. Okay, so let's jump to corporate news. And before we do that, if you want to check out my trades on pretty much everyday basis, you can check out Patreon club in the description of this video. Okay, let's start with let's say Nvidia. Okay, so Nvidia shares are trading lower pre-market, even though the reported beat on top and bottom actually earned $2.91 versus $2.57 expected. The revenue also beat and gave excellent guidance. I actually listened to the conference call, and the CEO Jensen Huang said that the company is firing on all cylinders, and I actually like the call. I mean, I think there is nothing wrong with this quarter, and the guidance was even better. So in general, shares are dropping, and I think the hot money is coming out of this stock right now. The people who actually wanted to be there only for the earnings. But in general, I mean, people say that the stock is too expensive because it's trading at 50 times next year earnings, but the company is growing like 50% a year. I mean, it's tremendous growth, and I mean, this is like an unbelievable company, a pure artificial intelligence play, and they're actually in pretty much in every category, and automotive rose, gaming rose, and data center was pretty much in line, but they gave better guidance for the next quarter. So I mean, I really like the quarter and I like the prospects, and if they can close the ARM Holdings acquisition, as they said in the beginning of the next year, this company could double or even triple in price. So in general, really a good quarter, and stock is lower pre-market. I would buy the shares and just buy and forget it, and the shares will go higher eventually. Okay, so that's Nvidia. Macy's. Okay, so Macy's reported a loss of 19 cents per share for its latest quarter, smaller than 79 cents loss expected. Revenue beat, same-store sales dropped 20% though, but it was smaller than 23.3% expected. So shares are dropping pre-market a little bit, but in general, it's just Macy's came in just too hot into this report. So it was sitting in overbought territory, and I think the shares needs to be come down to buy it. Okay, I would be interested in Macy's if it comes down under $8, but right now it's trading pre-market 853, 857. I think it's still too early to buy them. Okay, BJ Wholesale Club. Okay, so they reported earnings of 92 cents versus 64 cents expected. Revenue topped as well. Comp store sales rose 18.5% versus 16.7% expected. And actually, I like the earnings for BJ. And shares are trading pre-market lower, and I think it's a pretty good buy on this report. Okay, so if the shares open lower, I would buy the shares. Okay, I think it's pretty good buy. BJ. Okay, so I have to talk about Tesla. Okay, Tesla shares has been on absolute tear lately. Okay, after it was announced that it will be added to S&P 500 index effective December 21st. Okay, so it's been a huge run for Tesla in the last several days on this news, and I think the run may continue. Actually, Tesla doesn't look like they're overbought or anything, so it may take its all-time high. I mean, I've been bullish on Tesla for a long time, and I continue to stay bullish on Tesla. I think the shares go higher. Okay. WBA. So WBA, and there are several companies affected by this. Actually, I'm talking about the pharmacy companies. WBA, Red, which is WBA, which is Walgreens, and Red, which is Rite Aid, and CVS. Okay, CVS. Okay, so it was they were under pressure in the last few days after Amazon announced its new pharmacy venture that allows for online ordering and delivery of prescription drugs. So this is not good news for these companies because Amazon coming in and disrupting the category, it's always bad news for the existing participants. But in general, I like out of those three, WBA, RAD, and CVS. I actually like CVS more, even though I bought puts before on CVS. But I think they're in better shape than others because of the Aetna acquisition they have completed earlier, and I think they're actually a better buy than Walgreens or Rite Aid. So if I have to choose, CVS would be my choice to buy. Okay, HD. Home Depot. Okay, so Home Depot reported excellent earnings, but projected higher cost and plan to spend $1 billion to make permanent worker pay increases. So same-store sale growth of 24%. Shares dropped on this report, and I think it's a great opportunity to pick it up because. I mean, it was traded a little bit high, but I like the report actually. I like the report, and I think Home Depot is a buy in this environment, and I think Home Depot is going higher, and this is a good opportunity to get into the stock. Okay, KSS. Oops. Yep. Kohl's Corporation. Okay, so Kohl's reported excellent earnings, but projected actually the stock jumped like 11.6% after a company reported a surprise adjusted profit. Kohl's earned 1 cent versus 48-cent loss expected, and actually it was a surprise for me. Actually, I thought that the earnings were not going to be that good, but obviously shares jumped on this report. And I mean, it's a lower pre-market today, and I think it's still a buy. I mean, Kohl's to me is still a buy, and it's looking good, not overbought or anything. And on this drop today, I would buy the shares. DKNG. DraftKings. So DraftKings jumped 9% after Loop Capital initiated coverage on the company with the buy rating. Well, like I said before, it was I was recommending the stock when it was like in low 40s, when it was in high 30s, and I think it continues to go higher because the vaccine and the re-emergence of sports will benefit this company tremendously. This company, DKNG and Penn National, are two pure plays on re-emergence of sports, and I think DKNG is a good buy in this area actually. Moderna. So Moderna shares have been on a wild ride recently after announcing their vaccine to be 94.45% effective. But some analysts downgraded the stock on valuation, and shares came down after that. And actually, after it was funny because Pfizer and BioNTech came out and said that their vaccine is 90% effective. Then Moderna came out and said that their vaccine is 94.5% effective. And yesterday, Moderna and BioNTech came out and said, well, we recalculated this and we think it's 95% effective. So it's pretty funny, this tug of war of the effectiveness of the vaccine, but they pretty much have a similar type of vaccine using messenger RNA technology, and both of these companies have been on the wild run recently, and Moderna at $103 was too high, but $89 could be an interesting buy to me. Okay, so I would consider Moderna, but I would like it to come down a little bit more. Okay, NIO. Okay, so NIO, I have to mention NIO because it's been one of the wildest stock on the market. I mean, the volume on the stock is tremendous. The interest on the stock is unbelievable. I mean, it's been one of the, if not the most active stock on the market for the past several weeks. Okay, so NIO reported good earnings, sales more than double in the latest quarter compared to last year, and showed smaller than expected loss and gave a beat guidance, but the shares ran in like 1,000% this year. So I don't know if this is sustainable, and it looks like to me it looks like the shares may come down even more. So if you want to establish a new position, I wouldn't buy NIO over $40. I think it should drop under $40 before I establish a new position in NIO. Okay, NCLH. And it's Norwegian Cruise Line. So Norwegian announced secondary stock offering of 40 million shares of $20.80 and will be used for general corporate purposes. And after the announcement, shares dropped, and I'd like to buy Norwegian under $20. I mean, yes, it's an ultimate. Pretty much the cruise lines are an ultimate vaccine plays, but I think I can buy this under $20 if you want to buy the Norwegian. And I like this cruise line, but I think it's too early to buy them. Okay, Sono. Okay, so it's an audio equipment and speaker company, and it earned 15 cents per share compared to expectations of a break-even quarter. Sales jumped 15%, including 67% growth in its direct-to-consumer business, benefiting from consumers staying at home and buying their equipment. So actually the shares will jump higher. Looks like 18% rise pre-market. I don't know if I want to buy it at the open, but if it drops a little bit under $20, I think it's a terrific buy, in my opinion, because Sono looks to me is breaking out and will go higher. Okay, CSIQ. So CSIQ shares are higher, and it's a solar company posted unexpected Q3 profit. The revenue beat as well. Guidance was pretty much in line with estimates, and actually CSIQ in a pretty good position to go higher. I would be a buyer of CSIQ even after opening higher. Okay, and the last one I'll give you is NUAN. Nuance Communications. Okay, Nuance Communications is a provider of artificial intelligence services, and beat estimates by 2 cents. Revenue beat as well. Cited strong results in its cloud-based healthcare industry solutions, and it's a pretty good position here. And shares are opening higher, and I think it's a buy. NUAN. Okay, that's it, guys. Don't forget to subscribe to my channel and click the like button, and I'll see you Monday.